What is up, you guys? Thank you so much for stopping by once again. Happy Friday. Tonight we're going to be talking about MULN stock, MULN Automotive. But before we do so, make sure to hit that subscribe button, hit the like button, share this video with your friends. Make sure to get some people in here that want to learn more about the trade. But with that said, let's go ahead and jump right in. A few things to talk about with MULN stock. We did get a few of the targets we were mentioning yesterday, but let's just touch bases with this higher term time frame before we get into the short term stuff. I've been talking about this is volatility here, represented by the indicator BBWP. We have reached an expansion phase, and it's starting to contract. Now, if you can take a look at the stochastics momentum here, this is our momentum oscillator. The oscillator is actually starting to curve here. It's showing some weakness. So there is a possibility to where we can face a contraction phase down into the extremes one more time, and having the momentum go into lower percentile of the oversold area. So we can actually look historically how many times we've actually gone below where we're at approximately 8.6 within the 10% now. So if we go to these lower iterations, actually at the IPO, or right at the beginning of the trading of this asset, we can see that we even touched 0.2 or 0.3 of oversold. So we still have we could potentially still have a ways down here. So I honestly, personally, I would actually like for this to go down into the fully contracted level, and having this touch this bottom right here, because if we go into this extreme percentile of contraction, the likelihood of an explosive move is very high. So let's go ahead and jump into let's see, we're going to jump into the hourly chart here and talk about a few things. So I actually found that we're in a descending channel here. Now, these channels are usually trend reversal signals. So, and a way for us to be able to know that we are within the channel and the channel has been validated is simply by looking at how many times we've tested its resistance. So the resistance looks like it's been tested once here and once just yesterday. So we do have at least two touches. So that actually validates and confirms that we are within this formation. Don't count this one because this is just where we're starting the trend from. Excuse me, you guys. Anyway, so let's take a look at some moving averages, because those are playing a pretty important role right now. Okay, focus here on the SMA 10. This is our 10-day simple moving average, and it looks like it's been helping us, kind of come down. We'll use a downside trend, and this is assisting us to the downside. We can also pull up an exponential moving average, particularly the 7-day. The 7-day looks like it has also been helping us with this downtrend, and we could also face some rejection in the event to where we do go up a bit. So it looks like the asset closed at a 23.20, and we do have, within the cent, it looks like we do have some resistance here that's confluent with the 0618 at 23.74. So there's the possibility to where we can actually go up here and test this resistance and continue downward, which would then have the SMA 10 and the EMA 7 in respects to the price action near each other. So let's go ahead and reference our notes right here and see what else we got. Okay, so as far as let me close out our moving averages right here. And I apologize if you guys can hear my toddler in the background. He's making some noise in the background, and I'm sorry, he's making some noise in the living room right outside of the studio here. So okay, let's look at the price action. Yesterday we mentioned that the potential. I mean, we mentioned that we could use the 786, which is right here, that we could use the 786 as a form of support before we take off to the upside. So you can actually see the dates right here. So this is October 13th, and this would be the pre-market, the early sessions. So in the early sessions, we actually did come back down to the 786. And the 786 is actually a not 786, 0.786 fib ratio. We did come back down to find support and use it as a bounce like we stated yesterday. And also, we did get the rejection that we were looking for from the 2 fib. So we actually just wicked right above it, just a microcents away from it. So, we were pretty spot on about these areas here. Now, what we were wrong about was the fact that, I was saying that if this is the breakout out of whatever formation that we're in, we can use the 1.618 as support before some upside. Unfortunately, I didn't see the descending channel yesterday, and it makes sense now why we are not moving towards the upside. And the reason why is because of the golden rule of 3. We were mentioning that we have a test 1 and a test 2. Now, test number 3, could potentially happen after some more downside, which could actually present a pretty good opportunity for us to make a hedge against our long-term hold position. Excuse me, guys. Hold on just a sec. It could present, sorry, you guys, I'm back. It could present an opportunity for us to be able to hedge against our long-term positions by opening up a short-term. Now, the asset is trading within the 20-cent range, so we, keeping this as a swing trade always presents a huge risk. I'm not the biggest fan of holding small caps overnight. It's just a lot of volatility and a lot of area for, when you don't have control. Say something happens in the 1 a.m. session. I'm in Los Angeles, California. So if something happens in the 1 a.m. session here, which is, I think it's the European markets are open by that time, you're not able to do anything with your position, especially if you're holding options positions. Those you don't have any control over overnight exposure over the night. You know what I mean? So having that overnight exposure is a real risk that I tend to, as a short-term trader, I tend to stay away from. So I'm thinking that, just judging this on raw price action, we have huge sell volume right here. So the likelihood of us coming back down to test a 236 is pretty high. And also the potential of testing, what is this right here? The 25-cent area is also relevant. It's within the books. Now, if we are already within this level here, in bear markets, when you trade bear markets, you tend to get what Wyckoff theory calls terminal shakeouts or springs. And those are just wicks down to the support level just so you can be able to get stopped out. So those are particular to bear markets. So we can actually wick down and test our descending channel support before immediate recovery. That's also potential. So let's see, we have about, what would the support be? If we were to do it in the earlier session, or before mid session on Monday, it looks like we are at about 21 cents, but particularly 21.98 if you want to keep that, if you want to be exact. So, and there's actually a way for us to be able to see if that target even matches with anything else. I mean, first of all, we can just expand our view just a little bit and see if there's anything within this area. But we've already mentioned before that MULN stock has been making 52-week lows pretty often. So we don't have that advantage. A way that we can be able to see downside targets, aside from us being in a formation and this showing us a relevant support, since we're intelligent traders, we want to make sure that we do have Confluence Supports. So we can take a Fibonacci retracement and use it inversely. So our range low, particularly, is this wick low right here from that candle, and it lays at about 22.92. We take it to our range high, which would be our, just above the 2 fib on this large candle right here from yesterday, and in an inverse manner, we'll get targets. So let's look. All the way up to here, we said, right? And we stop it there. And what do you know? Our one spot 272 is landing right at 21.91, and we were saying before the mid session that we can possibly touch 21.98 or 21.97. So this is direct confluence with. Sometimes I forget how to. I don't even know how to pronounce the damn word. Confluence. I'm not sure if that has to do with origin or with wherever you're from. Anyway, beside the point. But yeah, we're looking at a potential target of about 21.91, and if I'm seeing it and I have like -4 subscribers on this thing, then chances are many more are seeing it as well. And I'm talking about professional traders in NYSE, institutional traders, all that stuff, market makers. So we do have that. Just know that now we have 2 potential supports. One being both of them technical. One being the formation, descending channel, and also our fib retracement at the one spot 272. So that's a target, a low target for us to be able to keep an eye out for. And yeah, let's go ahead and take a look at the notes right here and see what else we have. We already drew the inverse fib. Let's see. Okay, here is something to note before we get a little too overly bearish on MULN. The structure, the market structure. I'm speaking particularly about price action. So we did see a low right here. This was the new 52-week low, which was we can actually see the low right at the top, right in here. Let's see. So that has a low of 22.52, and we came back over here to make a low of 22.91. So if I don't think this is actually going to happen just yet, but if we were to call this the bottom of this range, then we have potentially made now a higher low. And this presents a new structure and a new opportunity for us to be able to get out. Keep in mind that we have only seen 2 tests of the descending channel. We need to actually break 3 and reaccumulate again, and then break on 4, retest our newly converted resistance into support before takeoff. Another thing that we can look at is, again, in price action, this candle here has a high of 20 right there. It's right over here, you guys. This is where we can tell the high. This is the opening, high, low, and close of the candle. So this candle in particular has a high of 26.38 and our 135 here. So this now has broken market structure. As you can see, we've been making these are lower highs. So the highs being on top. So we're consistently making lower highs as the way down. And now this one candle came in and just changed the structure entirely. So we have broken market structure. So if we were to call this a bottom, we are now potentially creating a series of higher highs and higher lows, which is a good thing. It usually signifies a trend reversal, similarly to us being in a trend reversal formation. But again, you guys, I am definitely thinking that we can actually reach lower levels here, and we're going to validate that with an RSI and with some indicators and stuff. But for now, price action is suggesting some lower targets, but that doesn't take away from us having already created a higher high on price action here. Also, please know that we're on the hourly. This is a really small time frame. I usually like to trade minimum 4 hours to like a daily. Okay, so let's take a look at the notes right here again and see what else we got. So, all right, let's go ahead and take a look at the direction for sure now. Let's go to the RSI. Okay, starting with the 30-minute. Okay, we got rejection out of the bear strength percentile. Now, I know if you're not watching the other videos, you may not have seen it, but if you're new to the channel, new to my analysis, I actually post a lot in Twitter and in Discord. I'll go ahead and leave the links at the bottom. It's the handle is ARCa Bulls, ARCA BULLS. We have faced a rejection from the bearish percentile, from the bear strength percentile. So this is bear strength. Above the red line is bear weakness. Above the middle line, we have bull weakness. And you guess it, bull strength. The black area would be the overbought percentile, and the black area down here would be the oversold percentile. So our 30-minute indicator, our 30-minute RSI, suggesting it's pivoted towards the downside. Our moving average is also facing towards the downside, so we are likely to see some immediate short-term bearish action. Let's go to a smaller time frame to see if we can get a more of a zoomed in. So the 15-minute is also suggesting downside. The moving average is above the signal line, so this is pretty bearish by nature. I mean, micro time frames like 5 minutes are not something that I typically do, but it is also pivoted towards the downside. The moving average is below, which is bullish, but I mean, we're within the bearish control zone here, and it looks like it's trying to head towards the bear strength percentile and potentially creating a bearish cross. So let's just go ahead and move up to some higher term time frames here. So this is the bi-hourly, and bi-hourly is, let's see, it's not only, oh man, it's almost parallel with the, let's look really close. Jeez, I have to zoom in like crazy. Let me see. Okay. There is a slight pivot towards the upside, and it looks like it's using the 14-day moving average as support. Now, what we have to pay attention here is that we definitely are within bear strength here. So the likelihood of this surviving is very low. This looks like it can be pressure to the downside some. Let's look at the hourly to see. Okay, yeah, the hourly is likely going to come up and face rejection from the moving average and or the line separating bull strength and bull weakness. So this can find some downside pretty soon as well. Let's go up higher time frames. This is the 6-hour RSI. The 6-hour RSI is in oversold percentile and looking like it wants to jump into bear strength one more time. This is pretty bearish, you guys. Even if it has a slight pivot to the upside, doesn't do anything within these ranges. And we can also, if you can just see this last iteration within a 6-hour, we can go pretty low. That's 17%. That's within the 20 percentile, and that's already way oversold. But we can still go lower. I mean, if we zoom out, we're likely to find something that's gone a little lower than that, or not. Let's see. Actually, yes. Sorry. This is the lowest of lowest iterations is right back over here at This is 2012, and it looks like it hit about 12 or 13%. We're currently at about 29, so there's plenty of space. And now also, you guys, if you're trading based on indicators, if you're trading based on an RSI, only because we're in extreme oversold or overbought levels, that doesn't mean that we're gonna see the reversal, either short the stock or long the stock. We're not going to see it from either side, only because we're at extremes. This is just an averaged index, so that we can be, and it's also delayed. So it's just for us to be able to gauge where we are. But in theory, we can oversell forever. We can be at the 100. We can be at the 0 mark or the negative marks or the negative reads forever, as well as on the top. We can go beyond and continue. You know what I mean? So, but nothing goes up forever, nothing goes down forever. So this is why the indicators matter. But just a quick note for you guys. Now let's go up to a 12-hour time frame here. The 12-hour is in oversold levels as well. We are sitting at about 25% oversold. The moving average is suggesting some downside as well. But as you start to see the larger time frames in the oversold area, the likelihood of coming back up after a few sessions or a couple sessions is greater. The daily is let's see, it's definitely oversold, and it's at 21.6 or 22%. Let's see, buy daily is also oversold. And 3-day is about to be oversold within the bear strength. So if we're gonna see some upside, man, it may be so immediate. But all the indicators are suggesting kind of a red day for MULN, which coincides with what we were talking about here. Let's go ahead and remove this trend line because I don't see us stopping there whatsoever. I really do see us finding support first at the 236 again, followed by us going down to the 0 fib at 25 cents and potentially wicking down to test our descending channel bottom support, which would be at about 21.90 something or 22 cents. So we have a couple entry opportunities here, you guys. Remember, I am not a financial advisor. I am not suggesting for you guys to buy or sell anything or any asset. Everything I say, please use it as a form of entertainment. And I'm just showing you guys what I see, right? So in my case, I personally would start gaining entry for an average down move. I'm talking about at the 236 at about 23 cents. So I'm going to do a 23 cent entry. We can do also a 22 cent entry. I said 25 cent earlier. I'm sorry, you guys. I noticed that the 5 was there and I just didn't correct myself. But yes, we would potentially test a 236 and then followed by the 23 cent area. 22.52 to be exact, but yeah. So it would be the low of this candle here. So the low, we can see up there, it says 22.52. So 22.52 low, along with this little trend line right here, would be one of the entrants. And then also if one of the entries could be also down here, or could also be down here at the 22 cent level. Why? Because bear market's wick, like we spoke about. So these are potentially 3 entries that we can get for a momentum trade that can lead. Sorry, let me go ahead and grab this one here. This momentum trade can present about a 10% gain in a day. So just over 9%. Which could be pretty good. Now, if you're averaging down, obviously it's going to be around 8.5%. But if I don't recommend this, and I am holding some 6-month out call options on MULN. They are about 30% up right now. even with this bearish action, which is amazing. Holding this asset overnight is always risky. But remember, there's a huge catalyst. The ELMS, I forgot. I think it was a merger or an acquisition of some sort. I don't really follow fundamentals, you guys, but I did hear that catalyst may already be in processing, or I'm not sure. So that's another reason that we could see some loading up of volatility and a potential reaccumulation right down here for an explosive move. This can actually play out in one of the exit strategies that descending channels or descending broadening wedges use is actually the silly old inverse head and shoulders. So we can actually face this type of movement here. So that's that big green candle that went up to the 135 from yesterday. That would be our test number 2 of the resistance from the channel. We could see a move. Actually, let's keep in mind that we could, potentially go all the way down to this level. This is going to be a third potential buy. I don't actually see it going that low, but we just have our buy set there just in case. We can see a rejection. I mean, we can test this here and reject again. This would be the third test number 3. We come back and for real this time touch the support bottom, creating the head. We come back out on the 4th try. We break out, right? We come back down and test the channel, the newly converted resistance into support, and then we move up. And this would essentially create an inverse head and shoulders. I don't really believe in these patterns too much unless they're historically backed, but it's important to just keep in mind because they do play a certain psychological factor into these plays. So, we would just move our channel down just a little bit, and we can move this down just a bit too, because this would essentially be the confirmation of the resistance turning into support. So that this could be, this implied path right here could be a possibility. Just make sure to not take this as literal advice. Excuse me. Just know that this is potentially what could happen, and I'm showing you guys like a trend of making new higher lows and higher high structures as well. But anyway, that is actually going to do it. Oh, well, one more thing real quick, you guys. This is one of the indicators that I have released with Crypstex. It has a long and short signals. This is called Armor. It's a very intricate indicator. It's based off of it's comprised of several exponential moving averages that are very close to each other to help see the direction or the motion of an asset. This is the ARC enhanced MACD, and this is the ARC whale spotter, and you can see them right over here. These are all the Crypstex the ARC-Series indicators that were released with me. The reason why I brought this up is because our armor in the hourly time frame is signaling a short. So this is pretty bearish. And also our enhanced MACD has also given us a bear signal. So these indicators can be available to you. Just make sure to hit me on the DM, and I'll make sure to give you guys some instructions, or I'll give you guys the details as to how to acquire these. But now for real, you guys, thank you. That's it for the video. Make sure to follow me on Twitter. Make sure to hit the subscribe button, hit the like button. If you have any questions, you can always DM me. But I wish you guys a great weekend, and let's talk again on Monday at the bell. Okay, you guys, have a good night and a good weekend. Adios.